All right, guys. There are 3 stages essentially to a bear market. A lot of people would agree. Now, how you word them, how you label them, up to you. A lot of people have different versions. Stage 1, it's kind of like the high flyers. The market's going crazy. There's high investor sentiment. Like Mo, when we hear all of our friends talking about specific stocks, about the joke I made was a lot of my friends like Penn Gaming. Why? Because of David Portnoy.
It was funny.
Because I sat there and was like, look, imagine buying a stock because you think the guy who owns a piece of the company is funny. And everybody made fun of me because the stock went from 70 to 140. Now it's at 30, crickets.
Yeah.
Right? And everybody's like, oh, I sold it a long time ago.
Prove it.
Not one to prove it. You have the 18-year-old caddies telling me how I'm wrong on Palantir and Tesla and Bitcoin. You have all these people making money very, very quickly and very easily.
You have people that are trading that are saying, people do this for a living, and I'm sitting here in my family room making millions of dollars.
Which is possible, but for the masses, it's not.
Probably for a short time that's going to happen.
Okay. Stage 2, we're starting the reversion. Okay, so we're really high. So let me show you guys where we are on the stock market to GDP ratio. We're currently 66.3% overvalued compared to history going back to 1929. We hit a high like 4,800 on the S&P sometime in early this year, 4,800 or late last year. Okay.
Here's the big run up here was the peak of that market.
All right, so now we're in reversion mode. We're going back down. And the down, if you look at most chart, it's not a straight down path.
No, it's kind of down, up, little. People get real happy here, real happy right now.
Okay. It's all over.
It's over. This is the
We're
bottom.
good.
This is the bottom.
When I see articles of the bottom was hit, I've already seen that article like every month and I keep saying, if you watch my videos, you watch Mo's videos, I keep saying we are nowhere close to a bottom based on history. The market currently is worth 2,300 according to fair value. Now, it was a lot lower years ago, and as time goes on and GDP goes up, this fair value number will go up. But if you look at averages, guys, if the average is this, stocks do this. We don't go to the average. We go above or below. All right. So this reversion part is for us to go back to historical levels. Now, that's a process, and there's usually involved at some point a crash. I don't know when a crash will occur or if one will occur. It could be a long, drawn-out process. But if you look back at 2000, tech bubble, and the 07-08 financial crisis, there was a drop, and then a crash. And that's what happens. Right. Okay? So that's phase 2. Mo and I currently believe that we are in phase 2. But how do you get to phase 3? Phase 3 is capitulation and and basically saying nothing's going to work. The stock market's going to zero. We are nowhere close to that. My friends still are trying to tell me that I'm wrong on Bitcoin, that I'm wrong on Tesla. Most sold Tesla puts at $50, and the friends made fun of us, even though Tesla is currently over 50% lower than its peak. But they don't believe it's possible to hit 50.
No.
Go look at 07, 08, go look at 2000, go look at the late 60s and early 70s with a Nifty 50. How many stocks fell big and fell hard? And it's the most high-flying ones.
And it's always, the high flyers are going to be the first ones to go. You can't have stocks that go up a couple 100% and it's sustainable. With terrible sales, you're getting, basically, this time around, you got it from a pandemic. I'm looking at Peloton specifically.
EVs also. EV was big. SPACs were big.
The SPAC thing. Let's pull up that SPAC analytics while we're at this.
So, guys,
that is an amazing chart.
Peloton down 95%. All the major flyers: Neo, Workhorse, Nikola, Peloton, Palantir, Tattooed Chef. All the Tesla even. Guys, I think we personally believe that Tesla and Apple will be the last ones to fully fall. And when you see people giving up on those stocks, that's when you know we're close to a bottom.
Guys, in 2021, last year, this tells you everything you need to know. There were 968 IPOs and 613 of those were SPACs. This year, 83 SPACs with only 108 IPOs. That's incredible.
Yeah.
That's when you know, okay, this is a bubble.
Look at that proceeds. 162 billion versus 13 billion.
Incredible.
Guys,
everybody was doing a SPAC. Every day it was multiple SPACs.
You can be a great investor. I used to believe it was hard to beat the market. I don't believe that. It's simple. It's just not easy. The hard part is the emotional side, because when stocks are falling, you're going to sit there and say, my money's going to go to zero. When I heard all my friends telling me, oh, this market fell in half, I'd buy more. And now all of a sudden they're getting worried when the market's only down 20, 30% on the NASDAQ. And I'm like, guys, we're nowhere close to done in this thing.
This has been a very slow decline.
And that's what happens. Yeah.
Yeah, but that's it. You know, I said something to you a couple of weeks ago. I was like, this has been a very quiet 30% decline.
Yeah, correct.
Outside of us doing this show, I don't think that I would notice.
Yeah.
You know, it's not like there's panic in the streets.
I remember in 07, 08 going, man, the market's down 15%. I was like, how did that happen? From its all-time high? I'm like, how did that happen?
It's very quiet.
Yeah, which is a good thing because you have to get people to a point where something will occur that'll take us to the third point.
Right.
Capitulation, where everybody just goes, I'm done, I'm out, I can't take the losses anymore, move on. Even the 30-year-olds who are 35 years away from retirement.
And you can't make money in stocks anymore.
You want to look for that. There's a famous article back in 1982 where I think it was Barron's or Newsweek, somebody wrote the death of equities. And if you look at August of 1982, that was the absolute bottom of the secular bear market. Mm-hmm. And from 1982, the S&P was at 105, 110, and it finished in 2000 at 1,500. So 18 years later, it went up 15 times. In the previous 16 years, it was flat. Yeah. And that's a secular bull versus secular bear market. The next 10 years are going to be tough. Is it a guarantee? No. But looking at this data, this is not including dividends. The average 10-year returns, rolling 10-year returns, are 6.6%. When you're undervalued, it's 9.3. When you're overvalued, it's 2.3. But here's the scary part. When you're 30% or more overvalued, the average is a negative 0.1% per year loss on the S&P, just on the value of the S&P, not including dividends. So guys, do I know when this is going to go down? No clue. If anybody tries to, by the way, a big pet peeve of mine is when people try to tell me, oh, interest rates are going to do this next year. We're borrowing money on a house, on a property apartment building we own. And the bankers are like, our analysts say that interest rates are going to go down next year. It's not a good idea to lock in your rate. F off, do your job, give me my loan, because I'm not here to play that game. What I'm here to do is make good investments for the long term.
And every analyst is going to have their own opinion.
And as Warren Buffett says, the opinion probably tells more about the analysts than it does about what's actually going to happen.
Right. And you have one of the Fed presidents out there, James Bullard. He's like, yeah, interest rates are going to probably be 5 to 7%. It's the guy that gets to vote. He's telling you this, and now you're an analyst saying, hey, it's going to go down next year.
By the way, very well could.
Exactly. Who's right or wrong? But the point is, everybody has their own opinion on it.
To me, I make my decision based on today, what I see based on valuations. And if the S&P miraculously today was at 2,000, and literally somebody came out and said the world is ending tomorrow, I'd be like, okay, I'm buying more stocks. I wouldn't care. I would not care, because if my fair value is 2,400, I'm a buyer of stocks. Now, I'm going to go find the cheapest ones I can find, but I'm going to be a buyer of stocks.
The best fundamentals.
There will be a day when I'm a buyer of Tesla stock and people are out there looking at Mo and I going, you guys are stupid. You don't get it. I'm going to look at them and say, wait.
You're buying a dead company.
So I'll be like, wait, Tesla was great at 400, but it's awful at 40. Got it. And you might sit there and go, does this idiot think Tesla's going to 40? I think it's going very low. Now, Tesla's fundamentals could get a ton better in the next year or two before it goes to the bottom. But the bottom line is, I do believe Tesla will be a lot lower than this today.
Yeah, agreed.
So
I have to think it'll fall in half from here today.
Oh, yeah, I think so too.
I mean, I don't think it's
because I don't think that even takes them to a good value.
No, it doesn't.
I don't think 90 is even a good value for Tesla.
Maybe at that point, value catches up to stock price, but that would be pretty quick to happen.
Yeah. So the three phases: the high flyers go crazy, major market enthusiasm. 2, reversion back to the norm, back to the mean. And 3, we go way below that and people capitulate and say stocks are never going up. You're stupid for owning stocks. In 2003, I got trained at a job in June of 2003 where a woman in our group said, well, you don't buy stocks unless you're okay with 3 or 4% returns. And I remember thinking to myself, what the hell? I didn't understand back then what that meant. That meant that people gave up. And go look at and again, that's an anecdotal story. There's a lot of those, right? Liz Ann Saunders, I went and listened to her speak in 2009, and she talked about her, and I think Liz Ann Saunders is a moron when it comes to being Charles Schwab's chief investment. She doesn't understand valuations at all, but hey, more power to her. A bull market made her look really, really smart, but look at Cathie Wood, 160. Look at Jim Cramer.
Yeah.
The guy just makes every single, when you can just throw darts and make money, that's not a good market.
Right. When you can do here is a global freaking pandemic.
Yeah.
And stocks went like that. That's crazy. When you can, this is where you can.
And by the way, at the low, we only had 5,000 cases in the U.S.
That's the thing. So
we only had 5,000 cases in the U.S.
So at this point, we were saying that when we were here in January of 2022, we would have a lot of
We'd have a lot of deaths. We'd have cases. By the way, we had millions, and the stock just went straight up.
This should have gone straight down. But this is money printing, but whatever.
So if you like what we're saying, please pay attention. We have a great community here that you can sign up for. We're running a great promotion. If you sign up, pay for your month. If after 30 days you don't like it, 100% money back guarantee. Sign up right now at everythingmoney.com. You get all of our software and our other videos, plus the community. Take care, guys. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?